Good afternoon. Happy Sunday, World Wide Web. This is James, your favorite stock picker ticker guy. Please like my video and subscribe to my channel. I appreciate your support. Quick news update about XELA Technologies. They are the payment processor company to the world's most famous shopping experiences. They're the people you swipe your card with, do your rewards program with at your local stores. Most likely you're using XELA equipment if you're in a Fortune 500 company. I think 6 out of 7 Fortune 500 companies use XELA technology at their registers. We're talking grocery stores, department stores, all the big ones. The company is having a employment shortage right now. They actually can't find people to work there. That's one of their newest problems. They just underwent a 200-to-1 reverse stock split, turning this into a 4-cent stock into maybe a 3-cent stock into a $5.26 stock today. This chart is adjusted for that stock split. So this is all at 200-to-1. You can see it falling down over time. The company still has no cash. Maybe they own more shares of their company and they can dump some of those into that to raise some cash, or they can sell some shares to raise some cash and to sustain themselves. They haven't fixed the real problem yet, which is their prices. They need to charge these companies more prices. Apparently, they're either locked into some long-term deal to sell these processing machines too cheap to these companies, or they don't have the cojones to go in and ask for more money, or they're just incredibly not competitive for some reason. I can't imagine that. There's plenty of measures they could take to make themselves more competitive if they weren't. The industry is designed with a gross profit. Most companies, when they buy a machine for $1,000, they might rent it to a store for $100 a month, and they should get their money back in a year and then make profit on it before they have to replace the machine. And this business should have a pretty automatic gross profit system in it. I'm sure their competitors do, unless their competitors are getting laborers for half price, or their competitors are producing machines for half price. I don't know. Somehow this company is in a losing situation. They have no money. Their income stays very strong. It's about $1 billion a year. It's actually been going down lately. Looks like they've lost a few clients. Down to $1 billion a year from 1.7 all the way from 1.56. Yeah, this company is really hurting over the last 5 years. COVID shut down most stores. That they couldn't use their terminals anymore. You'll notice this was a flat line. So there is a COVID excuse here. There's not a recovery yet. Quarterly, it looks like it went up finally last quarter. Their losses trimmed tremendously. Usually that's a good sign. This looks like the best quarter of the year, the one that they just had. Believe it or not, they only lost $45 million. So they're getting closer to being a profitable company. That's a very nice sign to see. Their revenue also went up. That's a very nice sign to see. They're now fluffing over $1 billion a year. And they were down to, well, hang on. Yeah, now they're like 1.1 billion. Oh, this one was actually more, 2 points. No, they did an extra $7 million this quarter. So not a big beat on the revenue, but it was up. Their profits were down. I want everyone to keep in mind the final dollars in a quarter that a company brings in revenue. Those are the profit dollars. These are the fixed in costs. Maybe zero is right here. Maybe their employees cost this much. Their offices cost this much. The cost of the machines is this much. The cost of their upkeep and customer support division or whatever is this much. They're getting very close, like right around here, and they'd be profitable. They need to raise prices 15-20% or get the revenue up, one or the other, and do it on the same fixed cost. They have a lot of assets, I believe. Let's take a look at their assets. No, let me take that back. They're way wrong side backwards. Liabilities 1.5 billion. It actually looks scarier than it is. They're $1 billion a year company. That's reasonable. Most companies have liabilities that are equal to their year's revenue. They just don't have that many assets, so I guess most of this is unsecured debt, which might be driving their bankers crazy, but as long as they're making their payments, that's on them. Most of this could have been equipment that they financed and not property. I don't think they're in the property business. They have $9.91 million of cash, which is disturbing. They have a stock price that's worth $5 a share now. I have no idea how many shares they have to sell. They could have a ton to sell. They could have another year extension to their life because of this move. They could dump 10% into this market. Maybe they did this week. Maybe that's why the stock in 1 month went down 12%. It was already going down. It's down 84% in 6 months. It's a perpetual money loser. The product is priced wrong, or they're providing the service wrong, one or the other, or their clients aren't leaving them. That's the thing that really bothers me the most. It's the people. They don't want to leave them. They're not finding a better deal elsewhere. Year after year after year. COVID found some people closed, and after COVID, it kind of almost leveled off here. The big cataclysm cliff kind of fell off here, balanced out, and actually it looks like it finally went up again. I would regard this as very good news. This 200-to-1 reverse stock split is going to allow them to sell shares that they have for, $5, sell it down to $5. There'll probably be another crunch in this one, unless the most recent crunch was them dumping some shares. It actually went up afterwards. 200-to-1. I think that's like $5 or $6. So they're almost still right at their 3-cent, 4-cent stock price. I wouldn't really call this an up or a down from their pits. In fact, they're up from their pits. So we do see a stock price that has a slight waffle upwards. We only saw that here. We saw that here for a second, and it didn't turn out good. But at least the company is going to have some money to recover. But you know what? I was hoping that they wouldn't. I was hoping they would be